Good afternoon, ladies and gentlemen. Thank you so much for joining us today. My name is Homotso Tolamo from Finmark Trust. I am a financial inclusion specialist from the SADC program. We're so happy that you made the time to join us to speak about the effects of COVID-19 on cross-border payments as well as domestic payments in the SADC region. We're very happy today to have Damola Olade, who is the head of our SADC FI program, and to also have Sam Shongwe from MTN Eswatini, as well as Sandy from Mukuru and Mandla from the Central Bank of Eswatini. Thank you so much to our panel for availing themselves to speak about this very important and interesting topic today. We look forward to learning a lot from this discussion and to hearing a bit more about your experience over these past few months. So just to keep a bit of housekeeping, Damola will be our first presenter today, and then if you could make use of the Q&A section to ask any questions that you might have. You don't have to wait until the end. The questions will only be read out at the end, but you can keep your questions coming as and when our panelists present. Please engage as much as possible, and we will try to respond to as many of the questions as possible. We hope that this will be as beneficial to you as for us who've been doing this work, as beneficial as it has been for us. So without further ado, I'm going to hand over to Damola Olade. Thank you so much.
Thank you, Komoto. Good afternoon to everyone that's joined us. I see we have 70 attendees at the moment and counting. My name is Damola Olade. I'm the head of the Financial Inclusion Program at Finmark Trust. This webinar is themed around looking at the impact of COVID on cross-border and domestic payments. I have co-panelists with me here. I have Sam Shongwe, who is from MTN Eswatini, who will be giving us a sense of the issues around domestic payments using the mobile money platform in Eswatini over the last few months pre and post COVID, and give us a sense of how MTN has shifted policy in terms of the impact of COVID. We also have Mandla Dlamini, who's yet to join us. He is the head of the national payment system with the Central Bank of Eswatini, and I'm hoping he'll be joining us shortly. And then we have Sandy Reader, who is with Mukuru, one of our remittances service providers of fintech in South Africa, who has extensive reach on the African continent and specifically within the South Africa to the rest of SADC corridor. Sandy will be talking to us about how Mukuru has looked to engage with the market in spite of COVID, regarding how they've transitioned from a purely agent-based formats to much more digital, given the fact that COVID could be easily transmitted, especially during the time of a lockdown. My presentation will be mostly be looking at the effect of COVID on cross-border payments, and we'll be looking at cross-border payments specifically around person-to-person payments from South Africa to the rest of SADC. The data will specifically be based on the South African Reserve Bank data. I'm just trying to share my screen, and Tiwonge, can you please allow me to share my screen?
We can see it, Damola?
No, that is not my screen. That is a card. Okay, while that's happening, I will be talking about the volumes and values of cross-border remittances from South Africa to the rest of the region. We'll be looking at South Africa to the other 15 SADC countries, but we would also specifically be looking at the top 5 countries within the region, which is Mozambique, Zimbabwe, Malawi, and Lesotho. We'll be throwing Eswatini in there because we're going to be having a bit of a domestic flavor, given that we have Eswatini stakeholders on the webinar. So I'll be looking at this from a general perspective in terms of total values, total volumes. I would also break the information down by banks and non-bank service providers. That is looking at the authorized dealers and also looking at some of the trends that we're seeing along the lines of the Adlers 2, 3, and 4. We'll be looking at what has happened with average transaction sizes from South Africa to the rest of the region. Let me just check if I can share my screen now. Okay, I think we are in business. So there we go. So I'll also be talking about the average transaction sizes in as far as how we're seeing this across the different countries and the transaction sizes with the Adlers as well. And then I'll be reflecting on some of the policy implications and some of the information gaps as well, given the fact that we're just using regulatory data that is coming off the balance of payments platform. So I'm just going to get into the presentation. So just to give a sense of the data that I'll be using, as I've mentioned, we'll be looking at cross-border remittances data from the South African Reserve Bank. The specific codes that I'll be looking at would be the 401, which looks at gifts, 416 and 417. The distinction between 416 and 417 codes is that 416 are migrants that have residency in South Africa, while the foreign national contract worker remittances are remittances from migrants who do not have residency in South Africa. As I've mentioned, the Adlers essentially, those are broken down into banks and non-banks. It's also important to note that this data that I'll be discussing will be looking at volumes and values, and we are not presenting information at a customer level, that is at an individual customer level. Sandy will be getting into some of those during her presentation. And what I'd like us to reflect on around the data that we'll be presenting is that this data also then allows us to think about some of the assumptions to think about when we're designing this demand-side surveys in terms of looking at some of the reasons for the trends that we're seeing in the data. I would also be presenting some information around domestic remittances at some point right after we finish with the cross-border section. And the data we got from there, we'll be looking at the use of bank and non-bank platforms. So if you think about points of sale devices versus telephonic devices, given the fact that a lot of the countries in the region went through a lockdown, and it was important to look at and track digital financial services over the period. So before I actually get into what the figures are saying, I think it's quite important to speak on the importance of remittances as a thematic area for Finmark Trust. Remittances is one of our key thematic areas in a sense that we see cross-border remittances as one of the catalysts for regional financial inclusion. Cross-border remittances is also quite important in the sense that South Africa is the economic hub in the region, and migrants need to send money back home to their families to support them. And in the times of COVID, such dynamics becomes quite critical for us to track in terms of the ability for people to still be able to send money back home, considering the fact that they're either able to keep a job or they've been temporarily laid off or permanently laid off. So this is a really serious issue for us to speak about, and we will be getting more into the details, and I'll just move to the next slide to elucidate some more. So we're going to be starting out with this chart here that looks at the total value of South Africa outbound remittances. And I hope you can see my cursor. So we're tracking this at a monthly basis from January 2019 to June 2020. And as we can see a slight increase in the use of digital platforms to send money from South Africa to the rest of the region. In terms of the volumes, we can see a peak here in December 2019, which could be indicative of migrants sending money back home for Christmas. But obviously in April 2020, we could see the drop, which is definitely due to the coronavirus. And in May and June, we're seeing a resurgence in the values. But this specific chart on its own does not really tell us much. It does tell us that there's an increase in the value post-COVID, but we do not know if these are the same migrants just sending more money back home, or it is social assistance in terms of migrants that might be slightly more well-off and increasing the frequency in which they send money back home, or they've increased the typical values that they might send. So as I've said in my preamble, I mean, those are some of the areas that a demand-side survey would sort of probe further into. And perhaps once Sandy gets into a presentation, she could also give us a bit more insights in there. But what is quite clear is that there is a steady increase in the value of cross-border remittances, SA outbound, which shows that some of the work we've done in the past in terms of increasing the competition in the market, in terms of the participation of the banks, the non-banks, has led to more low-value customers coming into the market. The next slide here, maybe just starting with the chart on the left. So the chart on the left is looking at the year-on-year growth. So we're comparing, for instance, quarter one 2019 to quarter one 2018, quarter two 2019 to quarter two 2018, and that methodology is applied up to quarter two 2020. And what we can see here, we have different stories for the different countries. We can see that Eswatini is taken off in quarter one 2020, and there's a reason for that. The activities of Mukuru started increasing late 2019, and there was the introduction of a retailer model, ShopRite e-centric model, in the beginning of 2020, which has led to this surge in the percentage change over quarter one 2020 and quarter one 2019. The story looks quite different for Mozambique. We can see that there's a decline in the quarter-to-quarter growth rate, and this could be due to the fact that you have more low-value transactions coming into the market, which could be indicative that we are starting to capture the low-income people that are more likely to be working in the informal sector, and the fact that they're starting to use formal platforms, and that could be indicative of that. Again, this is something that we ought to tease out better within the framework of a demand-side survey. Malawi keeps an even keel until Q1 2020 and starts to taper off. That's definitely an effect of COVID. And we can see that Zimbabwe was increasing from Q1 2019 and then kind of evened out. Just for the benefit of time, going to the next chart on the right side of the screen, we have the growth rate now, but looking at the total values year on year, but on a monthly level. And similar trends, but much more high resolution. As you can see, the cluster of dips around the period of the lockdown and the resurgence that happened thereafter. So now this next slide is looking at the total number of transactions. This is essentially looking at volumes now. Looks similar to the values chart, but we can see that something similar is happening around March, given the drop from March to April and the resurgence in May to June. We can also see that formalization, the rate of formalization, given that we are seeing more customers using formal platforms, that there's an upward trend there. If we track from January 2019 up till December 2019, and the slight oscillation that happens, the first quarter of the year, given that most people might have spent a lot more money in December. We expect a little dip in January, but then COVID is happening in April. And to just take this further, looking at the number of transactions now, looking at the number of transactions on a monthly level, and looking at that specifically for countries, selected countries, Lesotho, Malawi, Mozambique, Zimbabwe, and Eswatini. Again, the number of transactions have increased for Eswatini. The number of transactions for Malawi and Zimbabwe kept increasing, and we can see that the effect of COVID. This is good news from the point of view that we are essentially getting more low-value customers using this Adler platform that was designed for that purpose specifically. We can see that Mozambique is also increasing, and the little oscillation around April, and so for Lesotho. In terms of the growth rate for Zimbabwe is quite interesting from a volumes perspective. It shows that, as I've said, we're seeing more of the low value type customer coming into the market. Something similar for Eswatini, is same thing from Lesotho, and then obviously COVID occurred, and we're starting to see a resurgence. The resurgence for Eswatini is pretty huge, but the time scale, well, the scale for Eswatini is somewhat different for the other countries because it was pretty low. So if you look at the legend on the right side of the chart, that speaks for Eswatini, while the one on the left looks at the rest of the countries. So now just breaking down the movement across the different Adlers, the chart on the left looks at the banks, which is the authorized dealer, and ADLA 2, 3, and 4 are the non-banks. Again, Adler 2 dominate the market. Adler 4, the distinction between Adler 4 and the rest is that Adler 4 allows for goods remittances. And what is interesting here, and hopefully Sandra also gets into this, is that we had a lockdown. It seems the borders are closed, but there is still a need for people to buy goods to remit back home. And we can see that with the orange line there. If we consider the value, total value, and the movement in the line graphs. And we have a similar pattern if we look at the number of transactions in terms of volumes as well. Adler 2 dominating. Adler 4 is not moving in unison with the banks. You can see that Adler 4 is actually the second largest in terms of volumes and number of transactions when we are looking at the South Africa to the rest of SADC corridor. So just to get a sense of average transaction size, you can see that the average transaction size in the region from October 2019 kind of straddled between 1,000 rands and 950 rands, and then dropped earlier in the year in 2020, and then shot up from March, which kind of alludes to the point that I made earlier in the conversation when we looked at the values chart in terms of the values that we were looking at. And it seems that people have increased the value in which they're sending home. This could be due to the fact that we've seen a depreciation in the exchange rates of the rand and the need to get more bang for the buck per rand that's been sent back home. But again, these are areas that we would need additional information for us to speak to it. And then looking at average transaction sizes as well, specifically for the 4 countries, and this is looking at the chart on the right of the screen, we can see that average transaction size is between 1,200 and 800 for the 4 countries, and this is about $70 to $80. And it drops, and again, starting to take off post COVID, if you look at the chart and seeing the interactions from March 2020 onwards. With that said, I think I am going to just stop there while I allow Sandy to start sharing her screen. But I thought there were quite a few things for us to reflect on before I let Sandy start speaking. The fact that there will be people that would have lost their jobs would definitely have an impact on the charts that we've seen. The fact that there will be people that would have returned home once the notification of a lockdown was announced, that would impact on what we're seeing. And obviously this would definitely have an impact on the inflow of income for recipient families back home. And we might be looking at the data, but it's quite important for us to start thinking about ways in which we can support recipient families. And at this point, I would like to say that that is something that Finmark is thinking about, and we received positive news around a potential funding in which we can actually get some sort of a migrant relief support for recipient families in some of the countries within the region. And with that said, I would let Sandy get on with our presentation. Thank you.
Thanks very much, Damola. Okay, so I'm just going to quickly give everyone on the call a little bit of an overview of who Mukuru is, and then we can get into some of our data. So Mukuru is an Adler 2. We're a remittances-led financial services provider, and kind of the reason why we exist is really to empower typically financially underserved migrants to move and use money in a convenient, safe, and affordable way. because we really believe there is a desire there to improve their own lives as well as the lives of their families back home. So we're a digital remittances company, and we offer customers really an opportunity to send money back home to their friends and family in a cost-effective way. But we do offer complementary financial services to our clients as well that would otherwise be out of their reach. So for example, if you sign up with Mukuru in South Africa and you send money home to Zimbabwe or Malawi or Mozambique, etc., we also offer a simplified bank account product called the Mukuru card, and we're kind of relaunching our Mukuru funeral insurance product. I'll talk a little bit about that later in terms of some of the additional opportunities within COVID-19. So obviously, COVID had a big impact on Mukuru, and the data that I'm going to go into specifically relates to our numbers pertaining to the South African to Zimbabwe corridor specifically. So I haven't looked at SADC as a whole. I think Damola has given us kind of that overview, and I wanted to take a really specific case study. So we've looked at South Africa to Zimbabwe as a specific transaction flow corridor. It's not the only corridor serviced by Mukuru, but it is quite a nice case study, and we do have deep data within this corridor. So to start with the transactional impact in terms of our numbers for the SA to Zim corridor, I hope you can see my cursor. I've started at the beginning of this year, and we do see a typical drop-off in January as per the graphs that were shared on the country level by Damola, post a kind of a spike in December. But we were seeing decent growth in our transaction numbers for SA to Zim, Jan, Feb, March, and then there's absolute drop off a cliff in April when full economic lockdown hit in on level 5. So the recovery since then has been good as the economy has opened up, and we've seen some of our customers who couldn't send in April being able to send in May and June when they've been able to go back to work. But really a lot of that additional transaction volume has come from picking up formally transactions that usually kind of flow informally across the border at Beitbridge from South Africa into Zimbabwe. So that has been quite interesting to pick up this sort of surge in transaction numbers coming from those informal channels, moving more into the formal sector through us as border lockdown continues, which has been interesting. We also kind of spent a lot of effort launching 2 new products into the South African Zimbabwe corridor to try and drive some of these numbers as well. And the 2 new product lines that I've graphed here, these are in percentage where the orders are numbers of orders. The one was the ability to remit not only US dollars back to Zimbabwe in cash, but to collect ZAR rand in cash in Zimbabwe as well. And that percentage growth has been really good. And a lot of customers who otherwise may not have been sending through us have started to send money there. And that trend is sort of sitting between a quarter and a third of all of our transactions into Zimbabwe at the moment. We also launched something called Mukuru Groceries. It's not goods remittances. Essentially, it's a cash remittance targeted for groceries collection on the other side in Zimbabwe. So a cash remittance is collected in Zimbabwe, and the recipient turns that into takes that cash remittance and collects a pre-ordered bundle of ordered groceries in a particular pack. Those groceries are all sourced in country. It has been nice to see some sort of growth in that product, and the percentage has been pretty constant since we launched it in mid-May. In terms of the impact for this particular corridor on the average order size, the average pay-in value on a monthly basis, we were sort of sitting at around, the 900 to 1,000 Rand level in Jan, February, March. And then although the transaction numbers got very much smaller in April, the increase in terms of the average transaction size, so the average send, has really spiked in April and then again in May. And part of the problem there has been that our really, really low value senders, the guys who are sending the 300 Rand or the 400 Rand home a month, have kind of stopped sending. And so the average send went up when those really, really low value transactions sort of fell off the cliff. And so that average was pushed up in terms of the data. The recovery has been due to new products, a strong core, and a good uptick of first-time senders who in general are sending higher amounts. So as we've got sort of these informal channels coming into the formal space, we are seeing some good average increases in the send values. But we are concerned that the bottom of the pyramid, the guys who we used to support to send a small amount of money home are not sending in the volumes that they used to. And it is, as Damola said, really concerning that these guys still don't have economic support, and families in Zimbabwe who have relied on the small amount of remittance that they get each month are now really struggling. Okay, to look at the impact of cash versus digital, I've graphed here our orders against the percentage of those which were paid in digitally. And when the kind of level 5 lockdown hit in April, access to go and pay in at a lot of our pay-in points, clothing retailers, for example, were not available to our customers. The food retailers were still a cash pay-in option, but the digital percentage almost doubled in terms of the percentage of orders that were being paid for digitally. And that includes orders being paid for by the Mukuru card, the simplified bank account product that we sell, online card, credit cards or debit card payments, EFT, mobile payment apps, etc. And so that was really interesting to see. And it's settled at a higher percentage as well post the lockdown period. So I think there is a trend to kind of move into a more digital space in a lockdown world where travel is limited. And so there's been some good stickiness in those channels. A lot of our customers are still using the cash pay-in channels through the retail footprint in South Africa. From a purely digital perspective, 95% of orders created in South Africa sent through Mukuru, north of that in fact, across all our corridors, are created on digital channels. Pay-in step itself is very often in cash. And you can see that trend was changed significantly in lockdown, which is interesting. To look at the impact of customers, the graph I've got here looks at kind of the percentage of our customer base each month based on a key of reactivated transacting customers. So that would have been somebody who has not sent with us for 3 months, a retained transacting customer who has sent in the last 3 months, brand new senders, and you can actually see the monthly transacting customer numbers graphed here in yellow. So what is interesting is in April, we kind of saw a big dip in transacting numbers, a similar spread in terms of whether the customers who did send were retained or kind of reactivated customers. But post that, when the numbers started to tick up again, the percentage of retained customers was far lower. And we're seeing a lot more of that volume coming through from first-time senders and reactivated customers that hadn't sent with us in these previous 3 months. So again, talks to the fact that we're seeing some trend around picking up some trade formally that used to go informally through the borders when they were opened. We are settling now in terms of keeping the customers that came on board again, and they are sitting in a retained customer tracking effect. The customer numbers, though, you can see dropped significantly, and based on the data change in our average send, a lot of these new customers are actually kind of the new customer percentage is bigger than it's ever been, and we do worry about the drop-off of these retained customers in terms of their actual economic ability to earn enough money to remit home. If we look at new customer signups, Mukuru has been involved in a risk-based approach model in terms of customer registration and onboarding for the past 2 years. And what we did when we saw the lockdown kick in May is we actually launched the ability for customers to sign up directly under a risk-based approach, very small limit model, directly on self-service channels like USSD and WhatsApp. So our agent, the ability to sign up as an agent was put on hold due to the lockdown. And so you can see the green bars are the percentage of signups that come from agent channels. And when we got into the lockdown scenario, the need for customers to sign up digitally and their ability to do so under an RBA model was more than half. And so really important that that regulatory framework exists for us to be able to allow these guys to sign up directly without some sort of face-to-face approach. And you can see that we are continuing to see that self-sign-up, directly sign up on self-service channels remain a significant number in terms of our new customer sign-ups month on month. Okay. Just to move on, I'm quite aware of time and there are 2 more panelists to come. Some of the opportunities and constraints based on COVID-19 that we're seeing. For the SA to Zim specifically corridor, in terms of Mukuru's data, all of our payouts are currently in cash. Certainly there's an opportunity to explore a fully digital end-to-end process in a lot of our markets. We're seeing it across SADC. I think digital pay-in, so focusing on digitizing the pay-in side of that remittance flow, particularly for South Africa to Zimbabwe, is really interesting, and we will be working on more of that data. As I've mentioned, our goods remittances approach is not to remit goods cross-border. We don't move goods cross-border, but to designate a cash remittance for a predefined earmarked basket of goods provided in-country by in-country providers is something that's quite interesting. And I think there's an opportunity to expand that model based on unique corridor needs. We would be really interested in terms of understanding what has happened with the earning capacity of particularly our customers who usually send every month but on a lower value basis, and they're no longer sending. And we'd also be really interested in understanding how sticky our customers that have come into the formal sector when the borders locked down, how many of those customers will stay within the formal sector, or who will kind of revert back to more informal cross-border remittances once those borders open up. We also are looking to really improve our complementary product offering, specifically in terms of the Mukuru funeral insurance. We now allow customers to get insurance out for family members back home, as well as family members in South Africa, and make sure that the remains can be sent back home to any country within SADC. And then the Mukuru card is a key digital play for us in South Africa, making sure that typical migrant workers who need to send money home have a sort of a financially sound product to earn their money into, and from which to remit and create a financial footprint, so that they have access to other financial services in time.
Thank you, Sandra.
Okay.
Thank you so much for that. Before we move to Eswatini, I just want to maybe wrap up the conversation from a cross-border remittances perspective. So just based on my presentation and Sandy's, quite a few things are coming across. The fact that the South African market still requires a fully digital rail, if you like. So we're looking at a situation where a customer in South Africa is able to send money back home using fully digital rails. That exists, but it kind of excludes customers that might not have the types of IDs that's required to be fully KYC, which is where regulatory dispensations such as the risk-based assessment would come in and will be quite important going forward. And even at a cross-border level, a similar situation also is relevant at a domestic level. So we're looking at a world post COVID, where national payment systems will be looking to ramp up the usage of digital financial services, be it for person-to-person transfers, or for person-to-business transfers, or even government-to-person transfers. which is where this particular slide comes in, to sort of track what's been happening in selected countries. So we're looking at Malawi, Lesotho, and Zimbabwe. And the next presenter, Sam, would sort of give us more on Eswatini. But if you look at the chart on the top left of the screen, where we look at Malawi, we can see the activity around number of transactions via the point of sale and mobile money, and it seems to be increasing. We don't have very long time series there. It ends at April 2020, and Malawi also didn't really have an intense lockdown until much later, but this is quite encouraging in terms of the trajectory of the use of digital financial services. If you look at the right of your screen in terms of what's happening in Lesotho, we're looking at mobile money transactions in terms of money transfers. So the dark blue would be person to person, the green will be person to business, the teal would be bills payments, and the orange will be bank to wallet payments. And as you can see, bank to wallets was increasing, meaning perhaps people are assisting others in terms of sending money to beneficiaries that might be using mobile money. But generally speaking, from March, we saw a decline in the use of digital financial services, which would be telling us that perhaps people are using cash, which is not a great story, but it is something that at a national payment system level that we need to think about, which Mandla Dlamini, the head of payment system at Eswatini Central Bank, will be speaking to. And finally, something similar is going on in Zimbabwe, where we're looking, if we compare the mobile and POS there, from March, we've seen a drop in that as well, which could be telling us that there's more affinity for cash, even though we should be expecting more usage of digital financial services. So I'm going to stop sharing my screen to get Sam Shongwe from MTN Eswatini on board to get into much more detail around what the MNO is doing in Eswatini around reacting to COVID-19. So Sam? Komoto, I believe you're going to be sharing Sam's presentation.
Thank you, Damona. And thank you for the opportunity. Mine will be a very short story in terms of the experiences that we've had during COVID. I think just a few slides that talk to pre and post, pre-COVID and post-COVID. Just as a way of background in terms of the market, we launched mobile money in 2011, May 2011. The market in Swaziland is quite small in terms of the number of subscribers, but if you look at the population of about 1.2 million people, MTN already has about 945,000 subscribers, of which almost 700,000 are registered in mobile money. Of that 700,000, approximately about 72% are active, which is what you call RGS 30. We have a mobile money agent network of about 10,000 registered, split into the different regions. We have 4 regions in the country. The economic hub, if I can say so, Manzini, has about almost 50% of the agents, which also talks to the subscribers as well by region. We launched merchant payments or retail payments in 2018. It hasn't been a huge growth, but I think if you look at during the period of COVID, we started seeing a number of retailers coming through to accept mobile money as a form of payment. I'll touch on that when I talk about the experiences around COVID. And also what we started seeing a lot of what we call Momo business, which is business to customers or customer to business. You started seeing a number of transfers there, as most of your what you call the NGOs who have been doing disbursements, that started increasing as well. In terms of the products on the platform, we've had the standard product, money transfer and so forth. I think the newest that we've actually deployed is the open APIs. This is a platform for MTN as a group where we encourage small startups like fintechs to easily integrate to the platform so that they can accept payments using mobile money. So this is quite a new development which we are trying to drive at the moment. During the COVID period, we started seeing quite a number of interested businesses or fintech startups that were actually now onboarding onto that platform. Another service that I think actually has been quite interesting is service around the what you call the quick loans. Around the COVID period, we started seeing an increase around that. And also a number of municipalities coming on board to do collections. I think maybe if we go to the next slide, so we can actually go into, yeah, I think this is the main slide of my discussion. The lockdown in Eswatini started on the 27th of March. That was what we called a relaxed, what you call partial lockdown. Unlike our neighbors in South Africa, we did have a number of businesses still trading, but those had to be essential service businesses. So you needed to actually apply for a license to be able to be active and open your businesses around the period. We observed a peak on Momo transactions on the eve of this day when mobile money was, when the lockdown was actually launched, there was quite a huge number of transactions that we saw. Then that also then started to go down during the actual lockdown. So our I think the graph on the right is showing the pre and during lockdown and post-lockdown. What we saw during lockdown, there was quite restricted movement in terms of business, customers, as well as just businesses. So what we did as an operator was, because MTN was an essential service, we then assisted our agents, especially those in strategic areas, to ensure that their businesses are open. So by securing them the permits with the government, so that we can ensure that they are able to trade. And then the other issue that we saw was that the transactions started decreasing because there was not much activity. People could not get to mobile money or to get to the agents because, as we know, they're in lockdown. As you can see, your agents decreased by 3% during that period. Your merchants that are taking payments via mobile money also decreased during that period. What happened around that period was that there was a lot of onboarding because a number of businesses realized that one of the ways to actually get payment and to continue their businesses was through digital means. So we started getting a lot of applications. Applications not only in terms of the actual businesses, but also businesses, your churches, organizations, your stockfields, and so forth. Even those that were actually dormant previously started being more active. But then again, as a business, we then needed to find ways to assist the government and assist our customers. Over and above just assisting them with permits, we then launched a campaign for free transfers below 100 Malawi. That campaign actually, which we are running as an MTN group, number of opcos, during that period, we started seeing a surge in transactions in terms of P2P.
Sam, there's a request for you to raise your voice. Sorry to interrupt.
Maybe there's an issue with my...
No, maybe just move closer to your device so you can be closer to the mic.
Because I saw that request and I tried to raise my voice. I'm actually shouting. Yeah, so can you hear me now? Is it better?
I could hear you all along, but yeah.
Oh, okay.
I guess
Yeah.
yeah.
So in terms of, we started initiatives that will actually increase activity in the market. So to also assist the government with COVID issues, we introduced free transfers. Anything below 100 emalangeni, we made it free for our customers, so there are no charges to that. We then also partnered with a number of the banks. We only have 2 banks that have a proper integration, where we've automated the integration. The 3 other big banks where we do not have such an arrangement. So we then put in place a manual process where we would then, using our call center and back office, would assist customers to be able to move funds from their wallet or from their bank accounts to their wallets. That actually helped in ensuring that whilst the agent network is more or less shut down, people still had access to mobile money. Then there was one major outcome from this that I think is an opportunity that we picked up. From the regulatory side, the regulator increased transaction limits as well as reduced bank transfer fees. That also enabled us for SMEs to actually pay salaries using mobile money. So we started seeing an increase in that, where you would see a lot of business to customers. So because the wallet limit was moved from 25,000 to 50,000 in Malawi, so it could actually almost accommodate everyone, especially in the mid to bottom of the pyramid. And the one opportunity that we were able to assist the government in is the electronic payment of social grants. This is mainly to the elderly. As you know, COVID, they become more affected. So the government needed a way of ensuring that they do not have to converge. Previously, the postal services, they would actually line up and converge for that. Using the agent network now, remember our agent network already was not so active. That is why you are seeing post-COVID, there's a bit of an increase, even higher number of agents than during pre-COVID. So we assisted the government by ensuring that we put load rebalancers across the country to assist the smaller agents in the rural areas, for instance, where they could not actually have enough cash for the elderly. We also were involved in training the elderly that, you know, when you actually get your grants, you do not actually need to withdraw all the cash. Some of the shops in the rural areas and even in the urban areas, they actually do take mobile money as a form of payment. So that could actually make it easier for you to manage the cash issues. Momo Pay currently is actually still 0 rated. So customers don't pay, customers and the merchants don't pay for their service. So if you need to go and pay for services at a retail outlet, you will not be charged anything. Also for the retailer, they are not actually charged collection fees. So it's something that we're trying to train the elderly to actually use that service. Well, the payments have actually been done once. That was for the last quarter. We are doing the second quarter starting tomorrow again, where we'll be paying about 1,500 per beneficiary. Normally, a beneficiary would be paid 500 emalangeni per month, but because the government has been paying over quarterly, so it becomes a higher amount, and that's why it requires us to ensure that the agent network is properly serviced. And then we are using the super agents or load rebalancers to assist with that. I think those were the main benefits that we saw around COVID. Obviously, I've already mentioned the influx of businesses and non-profit entities, including churches. You know, during lockdown, churches were actually shut down. Even now, it's only up to 100 people that can converge in churches. So what we saw was an influx of a lot of these non-profit organizations coming through to open up mobile money accounts so they can use that. I think maybe we can go to the last slide. So the learnings from COVID and moving forward is basically 4 pillars that we're looking at. We want to continue increasing cash to business and business to cash reach, where we are actually recruiting small businesses, SMEs, and corporates to actually pay salaries and also pay their vendors and suppliers. We also have just launched a partnership with government. So the second pillar, where we are looking at Momo Pay, retail and transport. We are involved now with the payment for licenses. So trading licenses, previously that process was digitalized up to the application, but then you could not actually pay using digital means. So now you can be able to pay using mobile money, and the integration is actually opening up for us several avenues. For instance, now we should be able to pay for a number of government services using that, because now that we are connected to the Treasury, the National Treasury, then mobile money is now recognized as an alternative for payment. So I think that has been one of the key things that came out of the COVID. We are also looking at transport, enabling customers to pay for transport. We really want to minimize the government of Eswatini wants to minimize the handling of cash as a means of reducing the transfer of the virus from person to person. So we started a pilot where we actually picked a few number of operators to stress test being able to pay for transport services. And then cross-border transfers as a learning is one of the key things that we are, unfortunately for us in Eswatini, we do not have cross-border. But the requests during COVID, we have seen that there's been quite a huge request in terms of, or the demand from our customers to actually have that in place. A number of Emaswati reside in South Africa, especially South Africa, would want to actually send money back home. A lot of people, because the borders are closed, cannot come home, and they're not able to actually send funds home. And you'll find that when they need to send funds, previously it was through cash or through coming home, and they would actually give their elderly. But the elderly do not have bank accounts. Through the payment of social grants using mobile money, almost all the elderly in the country that are of pension age are now registered. So all those that receive social grants are registered, so they have mobile money accounts. The last one is the bank interoperability. We see a huge need to partner with banks to enable us to be able to have free, seamless transfer between the banks and the mobile money platform. We have actually now adopted interoperability with the Eswatini Mobile, which is our competitor. So we've finally been testing that, and it's in place. So we will be launching that soon. That should also free up the ability for people to send money across the network. We want to see the same kind of structure happening with partner banks. During the COVID, what we also, maybe what I had not mentioned, is that we reduced the fees for movement of funds from your account to the wallet. What we saw was that whilst we were of 0 rating, the banks that we had partnered with were actually still charging, and they were only able to reduce a certain percentage, like 50% discount. That's what we actually offered our customers. But I think there's room to grow interoperability services. And I think if we can probably partner with all the banks in the country, that should be easier for our customers and general subscribers, for all the network operators. I think I'll stop there, Damola. I think that's the last slide.
Thank you, Sam. Thank you so much, Sam. And then we're going to move to our last presentation, which will be from Mandla Dlamini, who is the head of the National Payment System of the Central Bank of Eswatini. Mandla, are you all good to go? And right after Mandla's presentation, we're going to take some questions. I will end the webinar at 5:30. I hope you guys can stay with us until then. You can put your questions in the Q&A, as Komoto mentioned, and please add more questions. So right after Mandla's presentation, we can then answer those questions. Thank you. Mandla, over to you.
Thank you, Damola, and good day, everyone. Yes, if you can push through to slide 3, Damola. Yes. Yes, I'm from the Central Bank of Eswatini, and it has a mandate to regulate the financial sector with regard to both domestic and cross-border payments. I think everyone would agree with me that while the business wants to do business, while the business wants to provide services to the market, at the end of the day, somebody has to protect the customer, somebody has to regulate the environment, somebody has to see that the ecosystem is actually working safely, it is efficient, it is transparent, so that we are all safe. If you want to provide the services, yes, you get the necessary support, and for the consumer as well, the consumer has to be protected from ill treatment or poor services intentionally from the service providers. So yes, I will talk about the regulatory framework, touch on the challenges that we have experienced in the kingdom. We look at some business models and see what is it that can still be done concerning legal reforms or the review of the regulatory framework, and eventually talk to some regulatory interventions, time permitting. I think let me make it clear up front that here we are talking about cross-border payments and domestic. I think the domestic environment, it is easier to regulate because at least the jurisdiction, I mean, the regime, the regulatory regime, it is easier to control the situation within the country as opposed to cross-border. So there is much due diligence that has to be done, and there's the value chain and the partnerships required to do cross-border to facilitate remittances, particularly cross-border. There is much to do from a regulatory perspective. And you can imagine how much the service provider, the payment service provider, will do to correct and to meet the requirements of the regulator. Otherwise, one thing good, the regulator is supposed to support the business case presented by the aspiring businessman or service provider. In the case of the Kingdom of Eswatini, the challenges were were glaring when we talk about interoperability, because you can see from this fourth slide, when we look at the mobile money and the wallets used by the various commercial banks. So there was a surge in May after the COVID lockdown, associated lockdown. So I want to say it has been an opportunity to digitization, to gain groundwork, or to gain ground or a grip of the business to take the financial services to the users. Also, there is a glaring need, let me say this time with reference to cross-border remittances. There is a need for alignment of the regulatory units, because some will say there are special pieces of legislation governing payments. Another would be AML, anti-money laundering, and countering terrorist financing legislation. We will talk about financial intelligence centers in the various countries. We will talk about, including KYC requirements. So indeed, we understand what the businessman has to do, or what the business has to do to meet the requirements of the various regulatory entities, which are required in good practice to continue to collaborate so that it becomes easier to manage the risks that have been identified in the market from the services. In the Kingdom of Eswatini, yes, we've seen some bank-led models. Even the MNOs, we do refer to them loosely as bank-led models, because there was a need to bring the bank up front so that we could see who is going to host the trust account, and how sure are we that we are not exposing the citizens or the clients to flight risk and other risks that were identified. So we have also ShopRite stores. They've also applied for cross-border. They are partnering with with the commercial bank as well. Sorry to mention names, but anyway, we've got FNB which is supporting MTN for mobile money, and we've got Standard Bank, which is supporting ShopRite. Over and above, they are in their digital or their wallet products. And then we've got Mukuru as well, riding on another bank in Eswatini, an indigenous bank that is Eswatini Bank and Savings. And so what was clear was the question of interoperability. As in, it is good for the systems, for the infrastructure to interface, be it cross-border or domestic. It is one thing that has to be, that need not to be overemphasized to take the services anywhere. These COVID days, we have seen COVID-19 days, we've seen customers having to walk out when in fact they were trying to keep away from public areas, only to find that they need to go out to the agencies, the mobile money agents, so that they can be able to transmit funds, which made it clear that there is a need for interoperability for ease of providing services. If I can come to the legal reforms, what is it what is it? I think it's in the previous slide. What is it that the regulators are doing in the previous slide? What is it that the regulators are doing? These pieces of legislation, they do require reviews to catch up with the times, because the products and the needs, the consumer tastes and preferences, they continue to shift, let alone innovation and fintech. So hence the need for regulatory developments in terms of to catch up and to curb the risks that come with innovation and other new product offerings from in the market. So the central bank has been responsible for the review of the NPS legislation. It's a 2011 statute, and then we've got guidelines as well. They've been reviewed to meet fintech needs and fintech developments, coupled with innovation here and there. And oversight frameworks, they also need to be reviewed so that at least they put the value of the regulation in perspective. Some regulatory interventions concerning COVID, as you can see from the screen, the central bank did issue circulars to both the banks and mobile network operators, so that they could at least review the limits, the wallet sizes, and the fees, encouraging for digitization as opposed to cash transactions. And the region is also, or the Central Bank of Eswatini is also involved in the review, in the implementation of the cross-border payment systems in the CMA region, because we're using the RAND, as in the 4 countries, the Swaziland, South Africa, Namibia, and Lesotho. So just to encourage and to do the desired practice, so we are implementing a CMA directive. This is what goes to show that there is collaboration in the region. Later on, it will be grown into the wider SADC region. And there is an appetite from the other non-RAND countries. I think at a high level, this is what I could say. And the Central Bank of Eswatini is also involved in supporting government on banking the unbanked, as in taking the financial services to the countryside in particular. So we are trying to do much, and we do have all these developments are covered in our FinScope consumer survey. So to grow the access, to move access to usage, and to provide savings products to the market. Otherwise, I think this is what I could say in my short brief.
Thank you so much. Thank you so much, Mandla. I'm just going to start taking some of the questions. So one of the questions I'm looking at here, I'm going to field that question to Sandy. So we have Shirley Jeffries Leach that is asking that you've mentioned that low value customers are less likely to be sending post-lockdown. Is this because they are gone from the data, that is, they disappeared from the data, or are you able to analyze the data to see if former low value customers who didn't remit prior to April, who didn't remit in April actually sent bigger amounts in May or June? I'm trying to paraphrase, but does that make sense?
Yeah, I can see the question. Sure. So Diego had an observation as well. He mentioned that SADC revealed in the June-July period a slowdown of 20% of migrant surveys said they didn't remit because of the economic environment. And to Shirley's question as well, I think the two tie up. We do see in our data, customers that have been sending small amounts with us month on month on month have stopped sending. And so we can see that in our data, and that's kind of why I've raised the fact that I think there is a challenge for us there. And we can also, on a more trend basis, see that the composition of our customer base looks a little bit different from what it did before. And that is because a lot of our first-time senders are sending, on average, higher transaction values. But they are first-time senders. They are new customers. Those existing kind of like every month sending a small amount, some of those guys are simply gone. They're just not sending anymore.
Thanks, Sandy. So, I mean, just to add on to add a response to Diego's question, he asks whether we can observe remittances of goods as opposed to cash, which can then now be used at a retailer, as you've described, Sandy, earlier. So, Diego, the ADLA 4 license is specifically around goods of value remittances. So the charts that I was showing that depicted the ADLers, the ADLA 4 data is specifically speaking to that component. So perhaps maybe Sandy, you want to chime in? I would imagine that the cash remittances, which is then linked to a retailer, would be captured under ADLA 2. Would that be correct?
Yes, absolutely. It's a cash remittance. But we are not moving goods. It's a cash remittance, but we've just created partnerships in country to kind of give the sender clarity that when his recipient receives this money, there are goods available, because we just helped with kind of a partnership in that space, but it is a cash remittance.
Okay. Thanks for that. So another question is that there is a drive by the IOM, the International Organization for Migration, looking to bring the charges of remittances down from the average of 7% to 3.5%. So, I mean, I can speak to this, but I can also let Mandla already mentioned this. Within a common monetary area in Southern Africa, for instance, the cost of sending from South Africa to any of the countries in the CMA is under 2%. So it's already way below the 3.5. And the way in which we can drastically bring down the cost of remittances within the region is to have fully digital rails where we get rid of the cash handling. I would imagine that the remittance service providers might incur some cost in terms of onboarding people virtually, for instance. But once we can get a situation where our customers have access to digital store of value products in which they can then remit directly cross-border, that should drastically bring down the cost. Mandla, do you want to maybe say something around costing within the CMA?
Yes, with regard to cost, without getting specific to the cost, as in without getting to figures, the tendency, some of the payment streams are very expensive, and there is need to grow the volumes particularly on the rails that are affordable to the commoner, to the ordinary user. Because when you look at, let me compare the transfer fees when using the banks. Actually, they beat your imagination, because for one, here we're talking about the lower category in terms of the users. They don't have much, there's very little that is being transmitted. So if something goes, say, let me say in rand terms, say above 200 emalangeni, then how much, 200 rands, then how much do you need to send? Because here we're talking as in just to keep the fires burning at home. So there's much work that has to be done so that we get to to embrace cheaper rates for remittances and for cross-border in particular. Thank you.
Thank you for that. There is a clarification here that it isn't the IOM trying to reduce, which I understand. I was just paraphrasing the question that was posed in our Q&A. Let's take a couple more before we wrap up. So Sam, maybe something for you. I don't see any question coming in here specifically for you, but there was a comment for you around there's a comment here around the transactions cleared on an immediate basis, which the Committee for Central Bank Governors are leading in terms of providing a cross-border low-value real-time payments infrastructure, which would then allow banks and non-banks, including MNOs, to plug into that for cross-border payments within the SADC region. So that is something to look forward to once it's launched. I know that that is going through a testing phase at the moment, and COVID has kind of slowed down the development in that area, but it's something to look forward to. But outside of the TISIB, which is what it's called, because we know that MTN in South Africa is launching a mobile money. Can you say anything around a potential collaboration between MTN in Eswatini and MTN South Africa to realize this very low value a product that we're looking at, which also provides a fully digital option?
Yeah, thanks, Damon. I think we'd really welcome that solution as MTN Eswatini. The demand, like I mentioned, for cross-border is quite huge from our subscriber base. And I think if you look at the number of subscribers that we already have on our platform, it's almost 500,000 who are active on a monthly basis. So we believe that there's an opportunity for us to tap into that. With the launch of mobile money in SA, it's some of the partnerships that we want to leverage on. We'd like to see something similar. It's happening in other markets. For us, it's even much easier if you look at the exchange issues, the rent to the Lilange. And I think it's something that once South Africa is properly stabilized, we want to actually move into that. So we've started actually looking at opportunities around that.
Thank you for that, Mandla. And then there was a question from Esselina around the analysis of the impact of the regulations that the regulator put in place during the emergency phase. So, I mean, as Mandla mentioned, some of the regulatory reaction, one of them was the increase in the transaction limits, for instance. And we should be seeing that if we have a longer time series of data. We're still in June. We don't know what that would look like between March, April, and now. So it's not something that we can immediately see, and there wasn't any concerted effort to look at what the data says or look at the correlation between those two events. But it's something that we would be looking at over the course of the year. Maybe the last question to take here. Let's see. So someone is asking around ADLER's transaction, which ADLER's transactions were taken into consideration for the South Africa-Eswatini corridor. So it's all the four, outside of the fourth one. So there isn't any ADLER 4 in the South Africa-Eswatini corridor. So it's just the authorized dealer and Adler's 2 and 3. So Adler's 2 will be where Mukuru is, and ShopRite will be in 3. So that would speak to that question. Is there any other question here? Does anybody have one last question for us to take before? Maybe we should just wrap it up. Let me thank my fellow panelists, Manfred Lamini, the head of the National Payment System at the Central Bank of Eswatini, Sandy Rida from Mukuru, Sam Shongwe from MTN Eswatini. Thank you so much for the information you shared with us today. A lot of the attendees are asking if we can share the presentations. My view is we should be able to, unless you guys veto it, but we can take that offline. We will surely be sharing the FMT, and then we can sort of come to an agreement as to whether or not there's sensitive information in any of your decks that we can't share. I'd also like to thank the FMT team that's working on the back end, Komotso, Candice, and Tiwonge. And finally, to thank the 80+ attendees and the 63 that are still here right now with us, 90 minutes. Really appreciate your attention. We appreciate your contribution in terms of the questions as well. And our contact details will be shared with you once we share the presentation, so that you can get in touch with us and we can take this very important conversation going forward. So with that said, I see 3 more comments. With that said, I'd like to let everybody go and enjoy the rest of their day. Thank you so much, everyone. And please get in touch with us so we can take this conversation forward. Thank you, everyone. Bye-bye.